1 second. Fix this over here. There we go. All right. 22nd of September. Weekly Outlook GM. The first time in a long time that we've seen a bit of excitement come back to the market. So we're going to cover that today. If you're new here, welcome, GM. I stream every single day, at least once, and different themes each day. Today's is Weekly Outlook, where we look back at the week we just had and we look ahead at the week to come. Today I'll be talking about Bitcoin ETF options, which actually I need to find that post. Give me 1 second. Options. Bum. Okay. Jeff Park, I think he's called, is he? Is it this guy? Yes, correct. So I'm just going to pop this across here. GM. And after the Bitcoin ETF chat, we will be looking at altcoins. So this stream will be dedicated a lot to altcoins. Yes. Who the fuck cares about GMs? Excuse me. Arno, how dare you? So, Bitcoin options, altcoins. Is it time? Are we back? Or is it just a dead cat bounce? Trend updates, economic data, of course, the good old economic data, what's happening this week. And Bitcoin is heading into the quarterly options expiry. So big week ahead. PCE this weekend. Powell speaks on Thursday. Open US Treasury Market Conference. Interesting. Really all about Friday for this one. A little bit on Monday with some manufacturing PMIs. So, GM, we'll get right into it. Let me go over here and starting from, let's do a zoomed out perspective to begin with. Start out on a monthly, then we'll zoom in, then we'll go to alts. All right, cool. I'm going to start recording, and then we'll get going. I don't need any more altcoins, by the way. You guys are putting a few alts in. I noticed a couple that are of interest, which I'll add to the other ones I'm doing. This is not an altcoin stream. I'm only doing a few of them on Weekly Outlook to get an idea of where some of the different coins are at and different narratives and how it might all tie into each other. All good. So I'll start recording. GM. Today is Sunday, 22nd of... almost got it right. Sunday, 22nd of September, of course, not October yet. This is Weekly Outlook. So first of all, going to look at zoomed out perspective on BTC. Actually zooming out past the weekly and looking at the monthly. Because today I'm going to look at Bitcoin sort of briefly, the economic data, a bit, overview as well. But we're going to dive more into alts today because there's a definite trend shift or potential trend shift and certainly a sentiment shift that's underway, which I think is going to make the over-reliance on macro and economic data a lot less impactful, unless, of course, we see some major news or data. And the short-term nature of the market is probably going to be replaced by something more mid-term, meaning, the only way you could make money in the past few months is really scalping or day trading. I think you're going to see some sustained multi-day, multi-week moves now. And in both directions, by the way, which we'll get onto as well. So, GM. Bitcoin on the monthly, I mean, it's still the same as it has been. You can say it looks good. You can also say it looks bad. It's all perspective, right? The bad from the monthly is that we went up to the 2021 all-time high. We failed above that high and we're back below it. The good is we're in a monthly uptrend in the intermediate term, like since the lows, obviously, low into a high, into a higher low, into a higher high. And we're probably in the process of setting a higher low. That would be the expectation. We're at the monthly bands, which have held after 2 tests. So, I mean, you could call it 3. In July, we sort of went down towards the monthly upper band. August, we definitely tested it. September, we definitely tested it. We've held. Seems good from that perspective. So, it's not a clear trend yet. And I've said this over and over again. So many pieces of confluence point to 70k itself as being that level. So you've got, first of all, the 2021 level, which is basically 69, which is why obviously getting to 70 would be a confirmed close above. You have the value area high of the volume profile. And you have, of course, on the monthly perspective, we got one monthly close above it, but everything else has been below. Even these ones were wicks above, but no monthly closes above the 69/70k area. So until then, pullbacks can happen, sideways can happen, chop can happen, and rallies, especially rallies that dislocate and are inefficient and move up in one direction, you can expect them to fail and to pull back. The only thing that really matters here is, do we make a new low? Right? Are we going to go below 49 in this phase, or is it going to be either a bottom right now and we go to new highs in the next few weeks, or we're going to have some kind of, something like what we've seen? Because if you zoom into a weekly here, Bitcoin took about 6 months to trend up to the top. It has taken about 6 months to reach the low as well. So from March, we bottomed in August, at least for this current bottom, and are currently sitting at about 6 months from there, March to September, pretty much exactly 6 months of a pullback and correction. And so it's taken 6 months to make its way through this range and develop all of this. For it to just blast straight out of it, it's not impossible. That can happen. Again, that would be confirmed at 70. What I'd probably expect to see would be something like moving towards that level and then spending a bit more time there before a breakout. Like that's my general expectation. I think there's a big trend line that you can see here across these highs that we may see a first stab at 70, which would be like breakout from the trend line, breaks above 70. I wouldn't be surprised, by the way, to even see a candle close, like a candle close, weekly close above 70, to where everyone's just like, that's it, we're bullish now, confirmation's done, and then we see a pullback and we're just we've got another few weeks of chop before the eventual breakout. That, or the exact same thing happening but at all-time high. Because the all-time high breakout, of course, will attract a lot of breakout buying, and we might see a drop back, flush back. The simple fact is, Bitcoin could easily spend much more time in this area here, consolidating before breaking higher. Now, the same exact thing can still happen on the downside. So we could see down, up here, and it would be functionally the same. It would just require, and this is the important part, for this path, it would require more bearish catalysts to be realized, which we're not really having. The Fed cut rates this week, bullish. 50 bips rate cut is definitely considered the best outcome. More bearish catalysts to be realized, which we're not really having. The Fed cut rates this week, bullish. 50 bips rate cut is definitely considered the best outcome. The market was trying to price that in. The Fed give it to them. Market reacted well. The Bank of Japan decided to not raise rates themselves, which, without getting into all the details, I talked about it the other day, is bullish. It's at least good for the opposite of the carry trade unwind. It would actually mean the carry trade's back on, which is good. We have no economic data pointing towards a recession right now. There have been recession scares and growth scares, but then right after, the day after the Fed cut rates, there was a payrolls which you can see over here. One of the things the Fed is worried about is unemployment. And the Fed cut rates on Wednesday, and then the very next day we saw unemployment claims coming in lower. The expectation was 230,000. They came in at 219,000. So that means that's good for the job market because these are unemployment claims. These are not number of jobs open. If it was number of jobs open and the number dropped, that'd be bad. This is actually the number of people putting in for unemployment, which has dropped ever so slightly, or at least come in under expectation. So having that off the back of the Fed cutting rates is like, it's really giving a lot of credibility towards this kind of idea of normalization where they're going to avoid a recession. They're going to come back and be, the economy is going to avoid a recession, and inflation is going to stay down or stay okay, manageable, and the markets are going to avoid any major panic. I don't know if that'll play. Cutting into a growth environment is super bullish for assets, but it will absolutely skyrocket inflation. So this is something you need to remember as well. The idea of cutting rates is to try and stimulate a sluggish economy. If the economy is not actually slowing that much, certainly not to recession territory, it's like putting fuel on the fire. That's going to restart everything and kick everything. Yes, crypto will go up, stocks will go up, the economy will be booming, but you're probably going to see a reacceleration of inflation next year, and then the Fed's going to have to fucking raise rates again, and we're back into this whole shit show. It might just be that. It might just be that they're going to, kick the can further down the road, make sure there's no recession. That's the number one thing. And it's important that as well because, they have to cut rates for two reasons. Number one, they need the economy to be not in a recession because, for many reasons, political reasons, for whoever's in power. You've got, obviously, just legacy thing for Powell. He doesn't want to be seen as a Fed chair who took the economy into recession. And the debt, the US debt. So they have to be able to take in tax receipts so they can try and pay off some of their debt. So they need people in work. And, probably most importantly, cutting rates lowers the interest rate burden on the national debt, which the US has a massive debt. So there's definite political pressure for him to cut. He's obviously cutting. And that is probably going to start a path of further cuts. And again, as long as the US economy avoids a full-blown recession, this is all bullish. And really, this week was a big week because it was the last chance for bears holding on to like immediate collapse, crash. This is bad, that's bad, it's all terrible. Like, there were unemployment, there was the Fed rate cut, the reaction to it, there was the Japanese yen carry trade, which was still at risk of going lower, and every single metric that could have went in favor of this is bad, bears are in charge, it's going to go lower, they all went against them. So the tides seem to be turning, although it's early. You don't want to get like... The problem with crypto is, as we've seen, every time it starts to turn up again, people just smash back in and think, let's fucking go. Has there been enough pain? I'd say yes. I said this a couple of weeks back. I mean, the clearest sign to me is, which needs a weekly close above here, but you have low, a lower low, a lower low, and then a higher low. Now that absolute confirmation of that would be a weekly close above 64. That's needed to break that structure again, but we're in a good position right here. And then when you look at alts have been down and then down again and down again and down again. And if you go and just quickly look at total 3 and kind of view this throughout the summer, you have to look at it and say, how many times has it looked good again? It's not about necessarily the lows. It's about when does the market seem like it's back? Because that's where if you're talking about this bull market can't resume until enough people have been shaken out, then I would look at a few things. So obviously you had the top and you had people buying here and here, right? Because the bands were still green and it looked like it was all compressing in this nice bullish move. Then we flushed down. Then we bounced back up over here. Definitely another reason to get long. Okay, that was the shakeout. Let's go long again. Down we go. They were wrong. Comes back up. This was when Trump was doing the Bitcoin conference. Bands are green. It's come up above. People would definitely get long again there. And they get took out again. So at least 3 instances. And you could probably add this one in where with this sharp reversal. Probably some FOMO longs jumping back in here saying we're back. And then didn't go to new lows, which again is good. but that probably scared a lot of people into closing early. So there's 3 or 4 false starts that we've had so far. That's enough, right? It doesn't mean we can't go lower. It doesn't mean there can't be more. But that would be enough, in my mind, to say, okay, the market has spent long enough basically fucking everybody over and having false starts and false rallies and going lower to where people sort of get a bit disillusioned. They start to give up a little bit. And really, if you're looking at the total 3 as the proxy, I mean, the way this looks, none of that should get revisited in this bull market, right? If this is going to hold, the fact that it's trying and found support once and twice and 3 times all above that level, and then we've had this retest again, we can absolutely come back to the lows. We can absolutely chop around for another several months. I would not expect it to go down into here. So then you're starting to define your risk as initially you would look at it and say, well, this must be the bottom, right? If that assumption is correct. Then your question is, where will people want to bet on it? So people will want to say this is the bottom, because there's one thing that is for sure, and obviously total 3 is not like a coin you buy. It's an index. But the idea being, if that's the bottom, people will try to bet on this being the bottom, because greed, wanting to add leverage and all this kind of stuff. So could you see the market going like that? Potentially, if it wants to really inflict pain and bring back for one more sweep. We'll see. Looking at some individual coins will give you an idea of that. You know, you've had the higher low on Solana is probably the best one, because Solana has been, it's become the consensus best alt, right? So Bitcoin's obviously number 1 overall, but out of the altcoins, where it used to be Ethereum, people now like Solana. And when I say best, it doesn't mean it's up the most. You know, there's other stuff that's moving more at the moment, and Sui and Aptos, and I'll talk about all that shit. But there's always coins during a bull market, a small number, that people are willing to hold as a base of their portfolio. Bitcoin's always been that. Bitcoin's always been that, right? And then last cycle, and even the cycle before, people say, and Ethereum, so want to hold Bitcoin and Ethereum. And then going into last cycle, at different times or different ones, Solana for a little bit, but not really. Last cycle was really when Solana came into its own. It was still considered very much an up-and-comer. BNB was one, and even for a while, FTT was one, the FTX token, which is hilarious now, but back then, you know, it was second biggest exchange. Many people used FTT because they would stake it to get rewards and lower fees and all that kind of stuff. So Solana is basically the only one this cycle that falls into that category. You've got Bitcoin, which some people say, that's my portfolio, that's it. You've got ETH, which some people say, that's my base. And now you've got people starting to really consider and actually putting their money where their mouth is, Solana as that. So this is probably your best, if you're looking at like total 3, but you want to actually see it on a chart where you can see liquidity, where there's actual stop losses, all that kind of stuff. Because again, nobody trades total 3. Sol will be the one. So the only question you have to ask yourself here is before Solana goes for a breakout, is this the bottom? If you say this is the bottom, your next question is, can that be hit? I'm confident. I would say yes, I think that is the bottom. I would also think that Solana, given that the way it's making these bounces and not really showing a huge amount of strength here, like if Solana was able to go up there, you would say, okay, any pullback should probably come in higher. But right now, I wouldn't be surprised if Solana would make its way down to that level for another retest and to form a bottom. It's after having been one of the stronger ones throughout the summer, and obviously Solana has had a much, much better time of it than basically all the alts. If you're just talking top to bottom, right, from the top of the bull market first leg to the bottom, Solana didn't even retrace 50%. Most alts are 60, 70, 80. The only one that's better than Solana on that metric, I would say, is Bitcoin itself. So overall, it's done well. There's clearly been support. There's clearly been, bigger players or whoever that's been stepping in on it. But how many people have bet big on Solana and added a little sprinkle of leverage, because that's what people do, and would be at risk if it came back to there? I think it's a significant number, and you can see this by the fact that a relatively small bounce into the first supply area, the first gap, and it's kind of rejecting pretty hard right away. So I think that the strength is just not there yet for Solana. And I would argue that it's probably going to stay around here for a bit and maybe go for another stab of those lows. And at that point, I think it's ready to go. So if that does happen, there's probably a sign as well that other alts will do something similar. Another I can see that doing is Pepe, but I'll talk about Pepe later when I get into the altcoins proper. But before I do that, I want to get into back over to Bitcoin. That was just a side note, but I want to get back over to Bitcoin and talk about Bitcoin options. So mentioned BTC here. One thing, if you haven't been keeping track, I did buy back my BTC spot bags this week, and let me see here. Is this the, yeah, here we go. So don't need that. Here we go. So on what day was it? It was Wednesday, right? On Wednesday morning, I bought back my BTC spot bags because, as I mentioned, and I talked about this on trading analysis and everything, we originally moved up, we reclaimed the 50-day EMA and back inside the value area low of the distribution from the top to where we are today at that point. But we did not have the bands green, the daily bands, they were not green. So then I didn't buy, obviously. We then sold off back to the lows, back to retest. Then we had this move through, and it was this Tuesday, right on Tuesday's close, going into Wednesday. We had a reclaim of the 50, we had the bands turning green, and we were back inside the value area. That was why I bought, so I bought back my Bitcoin spot bag, and I'm holding it, obviously holding just now majority or entirely BTC. You can see there that we moved up towards the point of control, logical first area for it to stop at, but now in obviously if you drag it across and you look at the developing value area, it's like that, which I would still use. But I also look at from, once I believe there's a bottom, from top to bottom, here's where we're at, right? So from the very, very top to at least our local bottom that we know of, here's where Bitcoin's at. And so some areas to watch from a daily perspective, the 50 EMA and obviously the 1221 bands, combined with, along with this new value area low or previous value area low. I think that is an area around that 61 and a half, which is also filling in a previous gap, and there's a little area here. Anywhere in here, wicks down are fine, but you want to see Bitcoin ideally holding all of that if it's going to continue towards 70 in the immediate term. If not, be mindful that BTC has had a move up with a lot of untested areas and plenty of stops to go hunting below, and it might well do that, which I will flick back over to a new chart to look at. One of the things that you want to keep in mind for BTC is this daily trend, right? So the daily EMA trend is crossing, which means it's not bullish yet. 50 has to be above 100, above 200. So purple above yellow, red, above blue. And when it's not like that, they're not in line. You have 100 above 50, above 200, so they're crisscrossed. That can lead to chop. That is not a sign of a confirmed trend. When you don't have multiple confirmed trend reasons or confirmations, just think about it this way. All the way up here, from the 6th of September, all the way up, people are going to have got long Bitcoin. So, despite the fact that we've had this nice move, there are going to be people who've gone long and their stop loss is there. And there's going to be others whose stop loss is there. And others whose stop loss is there, right? And so on and so on and so on. And even someone who's put their stop loss there at the breakout, right? So the low of that breakout candle, and so on and so on, right? So it's not at all unreasonable to expect Bitcoin to have some kind of pullback. The actual confirmation, like I said, we like a weekly close above 64 would absolutely give a strong weekly confirmation. And again, flipping this level as well would be a lower time frame structure break too. Pulling back into this area and consolidating and then breaking out. So if it consolidates and has a BOS, you could consider, okay, that's as far as it's going to pull back. But the possibility for this to do a full round trip back down one more time is absolutely there. And maybe it has to go down for one more touch, and then it takes off. Right? It would just be essentially a repeat of what happened here. Low, into the high, into a low, into the high, back to support. People were, bet on the bottom being in too soon. Once again, we go down a bit and then up. So always remember, keep both bullish and bearish paths in mind. Not that that's even really a bearish path, but simple fact of the matter is this. The FOMC was bullish. The rate cut decision was perceived bullish by the market. The market feels a lot more, happy at the moment. I definitely noticed that. There's definitely a lot more sign of positivity and optimism. There's a lot more talk about altcoin this and meme coin that and fucking Q4 bullish. So that's usually a point or a time where people can take their eye off the ball a little bit. And we have seen a lot of altcoins rallying this weekend while Bitcoin has been sideways. So, yeah, I'm very confident that the overall bottom is in. But that just means Bitcoin won't go to 49. So anything up here is also fair game. Where you get your actual confirmation that that is not going to happen is when we go higher, not when we go lower. Because if Bitcoin starts to pull back here, and basically if it can't hold 61, I see any of these dotted lines as being possible and targets. So until you see the daily trend get fully reclaimed, you can expect to see chop around that. It's very common. It can chop and chop and chop and chop. And you might see something like that. And by the time it gets over here, then you have the bands all in line like that, like they should be. 50 above 100 above 200. And usually that's when it kicks on. Right? So just be mindful. It might still be slightly early to be getting way ahead of ourselves in terms of just pumping any fucking shit. But we'll see. 4-hour trend. And then we'll move on to the options talk. Bitcoin's reclaimed and is now fully in a 4-hour confirmed trend based on 50, 100, 200. Of course, what you want to see is if it pulls back into that it confirms and holds. But every major trend has the 4-hour bands like that, right? So that's why you track it. Every major trend has the 4-hour bands intact, 4-hour, 50, 100, 200. It's just like a faster moving version of what I showed in the daily. But not every single time it happens is it bullish. You see it here. They crossed over here. And of course, it was not bullish. We went lower. They crossed briefly here. It was not bullish. But we didn't make a new low, which is why I suspect that this, even though we will be probably choppy and we can consolidate and grind around it, I think we'll consolidate on the bands and then eventually break higher. We'll see how that goes. Now, I posted over in here. So this is from, I wonder, can I get it zoomed in? This is from a guy on Twitter he works for Bitwise, which is one of the Bitcoin ETF issuers. And I'll kind of talk about it and then summarize. But it's about an announcement that came this week. The SEC approved Bitcoin ETF options. So options are an instrument, a way of trading, expressing a trade on Bitcoin. Instead of buying or selling, going long or going short, you can buy or sell, call or put options. I won't get into the details of what an option is. It's really simple. You can just Google it. All you need to know is it's another type of instrument, and it's very, very, very popular with big players, institutions, TradFi, hedge funds, all Wall Street types, companies. It's the preferred trading instrument of choice for the biggest players because it offers a lot of flexibility. Most importantly, it allows for hedging, which is super important. And the kind of TLDR of this would be having a full suite of ETF options available is going to open up an avenue for billions more in terms of flows and volume to come in. It's not going to be used to buy Bitcoin. Right? The ETF already exists. If somebody wants to accumulate or buy actual Bitcoin, they will buy proper Bitcoin. They will just buy Bitcoin. If they want to buy and accumulate Bitcoin through the ETF for regulatory reasons, whatever, they will do that through the ETF. The options are not that. They're just a way to bet long or bet short. But what they will do is, at least in theory of this, is increase volatility and potentially massively. So you can read this full thing yourself. But I want to break down a couple of points. For the first time, Bitcoin's notional value will be fractionally banked with ETF options, meaning while Bitcoin's non-custodial cap supply is its greatest virtue, it's also been a drag, limiting its ability to create synthetic leverage. So what that means is, we all love Bitcoin because it's scarce, right? They can't print more of it. There's 21 million, or there will be 21 million, and that's it. That's great for scarcity. That's great for store value. It's not great for wider distribution and activity and participation. Because obviously, there's only a fixed number of BTC, and the only way for people to transact then would be for it to ever increase in price, which of course would be great for us. But supply and demand goes both ways. When price rises, if there is a fixed supply and price was rising too much, it will cap out because people are not interested to keep paying higher and higher prices. Demand will drop as price increases. That's the point. And it doesn't allow other players to get in. And obviously, like I said a second ago, the options allow now bigger players with different approaches, different ideas, different time horizons, different use cases to access this. You can buy individual stocks on the stock market, but you can also buy the S&P 500, which is an index of them, and you can also buy options, buy or sell options on that. This now makes Bitcoin and brings Bitcoin more towards what TradFi investors would know, which is this wide suite of products. Great. He says, despite Deribit's efforts, it never adequately solved counterparty's cap efficiency matrix for wide adoption. This is, to me, it's really simple. There's already, the one I look at, there's already a massive, very well established options market in crypto, which is this, Deribit. This is the quarterly OPEX, which is coming this weekend, this Friday, the quarterly options expiry. So it's the end of the month, but it's also the end of the quarter. And there's, 6 billion almost notional value on it, which is big. It's massive. Bitcoin's total perpetual futures open interest is like 20 billion. So, this is a meaningful amount. And as a side note for that, 65K is the big number. So the only number I'm looking at this week in terms of what matters for options is 65. I think if we are below that, we will stay below it until Friday. If we go towards it, let's say tonight, tomorrow, Tuesday, we move and pump towards 65. Initially, would expect that to be resistance. If we manage to flip it, then that opens up the potential for a relatively fast move up through some of the other levels. But I would expect, probabilistically, we don't go higher than 65K before next Friday, the 27th. Now back over here. The reason why Deribit doesn't really matter is that it's not compatible for US institutions. So he's talked about all these counterparty risk and all that shit. That's one thing, but Deribit just can't be used in America. It's an offshore exchange. So most of this new capital that's going to come into options, or most of this new activity is going to come in through the ETF options, is going to be in America because it's all regulated, SEC approved. That's the most bullish thing about this. Additionally, Bitcoin can now express duration as part of the leverage calculation for the first time. Retail traders have embraced perps to take on leverage, but these instruments are imperfect, more akin to a series of daily 0DT options that must be rolled over constantly. With Bitcoin options, investors can now make duration-based portfolio allocation bets, especially for long-term horizons. There's a good chance that owning long-dated, out-of-the-money calls as a premium spend will give investors more bang for their buck than a fully collateralized position that could drop by 80% over the same period. People often compare Bitcoin to a call option due to its premium decay and occasional explosive upside. Now you can bet on volatility upside with same or less premium while capturing more delta over a longer time frame. Extremely compelling opportunity. This is something that I disagree with. So what that word salad is in TLDR is, the way you trade, most of us will trade Bitcoin on perpetual futures. That's a crypto native product. That was created by Arthur at BitMEX years ago, along with his team. Perpetual futures, perpetual swaps don't exist anywhere else because the whole point of futures is that they're supposed to be dated. Futures in the commodities markets, the whole point is you're supposed to buy or sell with an agreement at a fixed date in the future to take delivery. But because Bitcoin is not a deliverable, it's a digital asset, and because the main use case of crypto is actually just speculating on price, it's not like I want to hold Bitcoin until this time, it's just I want to fucking bet on Bitcoin. Perpetual futures became very, very popular because they never expire, number one, and they carry the ability to get leveraged, which is obviously why people do it. So What he's saying is now retail traders are going to use options much more than they would have done before because they're now available via ETFs. Strongly disagree. Yes, some of the US retail that are whatever, using the ETF or buying the ETF, but these are more like TradFi retail traders, which is still going to be a very small percentage of retail traders. Most retail traders in crypto are like all of us, and we've been in for however long, but many of us for years and years and years, and options have existed all that time, and none of us use them, right? Not none, but you get the point. Deribit exists for everybody outside the US, pretty much. And when you look at the amount of retail activity on Deribit for options, it's a fraction, it's tiny. That 5-6 billion here, this notion of that is heavily concentrated towards big players, miners, hedge funds, crypto native and TradFi native, market makers, suppliers, whatever. Like, options are just not a crypto product. People just don't trade 0DTE options in crypto. And do people buy long dated calls and sell long dated or buy long dated puts? Yes, definitely. Do I think this is going to meaningfully increase that for retail? No. So the point of that is, I disagree with them, and I think that these options are going to be very much a smart money, big player, institutions. You're going to see a lot of activity and a lot of money into them, but I don't think it's going to be like a retail thing. My guess is, right? This next part is really we can skip that, talking about volatility smile, volatility skew. Upside vol is cheaper than downside. Yeah. Again, this is all like about the nature of how Bitcoin is structured, which it is important, right? Options are just volatility bets. So there's two ways this can go. In the short term, there's a good chance that the first few months of Bitcoin options leads to some explosive moves. Because a lot of what you see on the chart, big breakouts and breakdowns, often, like very often, they're not driven by any fundamental factor. It's driven by flows. Like almost always. Like everything under a 1 year time frame is driven by flows. And flows means buying and selling, like actual people coming in, buying and selling. The reasons why don't fucking matter at the end of the day, because just because I'm buying because of whatever, the halving, and someone else is buying because they want to hold it for 10 years, and someone else is buying because they want to hold a swing trade for 3 weeks. At the end of the day, you can spend all your time trying to figure out why is he buying, why are they buying it, or you can just accept the fact that flows are all that matters. So how that affects within the option space is that options are heavily impacted by volatility. So when you add options to a very volatile asset like Bitcoin, you're going to see two things. Number one, I think over time, these options are going to kill Bitcoin's volatility, and it's going to be bad. Not like when I say bad, it's going to be great from an investment perspective. It's going to be bad from a trading perspective, because you are going to get lower volatility. Now that's fine because we can just continue to trade Bitcoin, or we can trade more volatile assets like ETH and Solana, and just move on to other stuff. It's not like you're not going to be able to trade it, right? The S&P 500 is the least volatile of all the stocks, right? Between all the individual stocks and the stock indices, the S&P 500 is obviously the least volatile, and yet it's still the most day traded asset in the world. So it's not like you won't be able to trade Bitcoin. You will have to adapt because it will change. That's long term though. We're talking years. In the short term, you're basically going to add on potentially billions of dollars of exposure into options, a new type of instrument for the US market for Bitcoin, and on an asset that can go, up or down fucking 70% within weeks or months. So how market makers will hedge themselves